In our last class, we started relevant cost for decision making. And I mentioned that just as a recap, we said that relevant costs that are costs that are directly attributable to a particular course of action in making managerial decision, meaning that any cost that will be incurred for the purpose of a particular course of action are relevant costs. And we said that there are three qualities or attributes of relevant cost. One is future, two is incremental, then three is cash flow. We talk about what we mean by future, cash flow, as well as incremental, without wasting more, just as a recap. Then we talk about how to identify relevant costs for shortcut for identify relevant costs for material as well as labor. We said that in the determination of relevant costs for material, there are three key items that must be taken into consideration. One is the current purchase price, two is disposal value, then three is historical cost. We'll talk about each of them, all right? How you are expected to treat it whenever you see any one of them in a question. Then under labor, okay, we talk about how to identify shortcut, the shortcut for identify relevant cost of labor. Basically, we talk about two items. One is spare capacity, then two is full capacity. Again, I explain what you should look out for under each of them. They will now proceed to solve a question. All right. I think we should solve a question on this illustration number 1, which is Ojuelegba. All right. So all relevant concepts as far as relevant costs for decision making is concerned, we have covered it. So what we are going to do today are basically calculation. If you can't complete it, at least I should be able to do additional 3 different scenarios. So of course, I doubt if you can complete the 3 today. If we manage, you can do 2. Otherwise, we'll proceed next weekend by the next time by the grace of God. Okay, so please, if you are in the class, if this is your first time in the performance management class, please speak up. Let me hear from you, so that I need to bring you at par. And the beauty about online classes is that the classes are recorded. You can always listen to the video recording, and then you recover the lost notes. Okay. That's it. Please, if you want to ask me any question, always raise your hand. Don't interrupt the class, so that we can have a free flow interaction. So let's have another illustration. Okay. Let me see. I'm coming back to you. Like I said in our last class, relevant costing is a very frequently tested in ICAN exam. All right. So let's start with this illustration number 6. All right. Let's start with the illustration number 6. I need somebody to read for us. Let me see who will help us. Some of you have been in the class from day 1, but you have not spoken. All right. However, I need a volunteer first. I need a volunteer who is helping us to read. Yes.
Hello, sir.
Okay, maybe I should call one of you. Oh, okay, go ahead.
Can I read, sir?
Yes, go ahead,
Hello,
please.
sir.
Thank you.
Okay.
Yes, go ahead. I can hear you.
Okay. Clepatoni Limited is a company that builds innovative and environmental friendly housing. Their houses uses high quality materials and a unique patented energy saving technology. Used in the houses has been the result of the company owns extensive research in the area. Clepatoni Limited is planning to expand into another country and has been asked by a prominent person in that country for a price quotation to build them a house. The board of directors believes that securing the contract will help to launch the houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. The following information has been obtained in relation to the contract. 1. The chief executive and the marketing director recently met with the potential client to discuss the house. The meeting was held at a restaurant and the Clepatonic Limited provided food and drinks at a cost of 35,500. 2. 1,200 kg of material Z will be required for the house. Clepatoni Limited currently has 550 kg of material Z in its inventory purchased at a price of 5,800 naira per kg. Material C is regularly used in its houses and has a current replacement cost of 6,500 per kg. The resale value of the material Z in inventory is 3,500 per kg. 3. 400 hours of construction workers time are required to build the house. Clepatonic Limited construction workers are paid an hourly rate of 2,200 under a guaranteed wage agreement and they currently have spare capacity to build the house. 4. The house will require 90 hours of engineers' time. Clepatonic Limited engineers are paid a monthly salary of 750,000 naira each and do not have any spare capacity. In order to meet the engineering requirement for the house, Clepatonic Limited can choose one of the two options. 1. Pay the engineer an overtime rate of 5,200 per hour to perform the additional work. 2. Reduce the number of engineers' hours available for their existing job for the building to produce Y. Okay. Reduce the number of engineer hours available for their existing job for the building of product Y. Okay. This will result in lost sales of product Y. Summary details of the existing job the engineers are working on are information, assumed to be correct, sir. 5. A specialist machine would be required for 7 weeks for the house to be built. Clepatonic Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1.5 million naira. The machine is currently not in use. The machine can be rented for an additional 15 weeks at a cost of 1,525,000. The specialist machine can only be rented in blocks of 15 weeks. Okay. Alternatively, a machine can be purchased for 16 million and sold after the work on the house has been completed for 14,000 naira. 14 million naira. 6. The windows required for the house have recently been developed by Clepatonic Limited and use the latest environmental friendly insulating material. They produced the windows at a cost of 3,495,000 and are currently the only ones of their type. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purpose at the conference and would not be for sale to prospective clients. Clepatonic Limited has had assurance from 3 separate clients that they will place an order for 25 windows each if they saw the technology demonstrated at the conference. The contributions from each window is 1,045,000. If the windows are used for the contract, Clepatonic Limited would not be able to attend the conference. The conference organizer will charge a penalty fee of 150,000 naira for non-attendance by the company. The chief executive of Clepatonic Limited can meet the client directly and still secure the order for the windows. The meeting would require 2 days of the chief executive time. The chief executive is paid an annual salary of 41,400,000 and contracted to work 260 days per year. 7. The house to be built requires 400 kg of other materials. Clepatonic Limited currently has none of this material in its inventory. The total current purchase price for these other materials is 600,000. 8. Clepatonic Limited fixed overhead absorption rate is 3,700 naira per construction workers hour. 9. Clepatonic Limited normal policy is to add 12% markup to the cost of each house required. Produce a schedule that shows the minimum price that could be quoted for the contract to build the house. Your schedule should show the relevant cost of each of the 9 items identified above. You should also explain each relevant cost value you have included in your schedule and why any values you have included are not relevant. 21 marks. B. Explain 2 reasons why relevant costing may not be suitable approach to pricing houses in the longer term for Clepatonic Limited. 4 marks. Recommend with justifications a pricing strategy for Clepatonic Limited should use to price the innovative environmentally friendly houses when they are launched in the new country. 5 marks. Total marks 30 marks.
All right. Thank you very much. I appreciate. Hey, Abdulatif. He said this is too much, Abi.
This should be like question 1.
Of course, it's a compulsory question. You can see it's 30 marks. It's 30 marks. So the thing is, so the thing is that, when you are faced with this kind of a question on the day of your exam, you need to be very careful before you put your pen to paper. Otherwise, would have gone very far before you realize maybe you have made a mistake somewhere. So you take your time. If possible, you read and read again in order to understand the principle that examiner wants to test in the question, because every question given to you, there is a particular concept that the examiner wants to test. So one thing you should understand is that as far as relevant costing is concerned, the principle cannot be more than all what we have explained in our previous class, what we did last week. The focus will surely be on material as well as labor. There will be other costs that will be included, but the major challenge will be every other cost will be easier to identify, but the major challenge will be your ability to be able to identify relevant costs for material and then relevant costs for labor. You will recall when I was explaining this principle, I mentioned specifically that there are exemptives that you need to take into consideration. One of the exemptives is that when you are asked to cost a project or prepare minimum price or yeah. So what the examiner is simply asking you is to determine relevant cost. Examiner can ask you to cost a project, determine minimum price to quote. What you are asked to do actually is to determine relevant cost. That's on one side. The second exam tips, the second exam tip I showed you last week was that when you are given a table in a question under relevant cost, mostly all the figures in the table are irrelevant, except there is no other cost or there is no other figure other than what you have in the table. Because the third tip is that relevant cost question are solved through the additional information. The way this item has been listed from number 1 to 10 or number 1 to 9, that's additional information. So you are expected to solve the question on the basis of the additional information given to you. All right. Not only that, I also mentioned that if in a question you are given disposal value, and I said that the special examiner will surely tell you that the material will be disposed of at a cost, and that it is not a cost, rather it's a saving to the organization because you are selling the material, and when you sell, you are expected to get cash in return, all right? So that you are the one that will interpret the disposal value as a saving and that it is not a cost. These are some of the exam tips I gave to you last time. So let's apply this. Now, anywhere we want to talk about material, you need to consider those three principles, those three concepts I mentioned to you when I was explaining how to identify relevant cost for material, including the current purchase price, okay, the disposal value, and then the historical cost. Not only that, we are also going to talk about labor, all the concepts in relation to spare capacity as well as the full capacity. You need to take them into consideration whenever you want to determine relevant cost for labor. Give and take, we said that relevant costs are costs that are directly attributable. Like in this case, we have a project in hand to build a house. Any cost that is not related to building the house, okay, are not relevant. So any cost that can directly traceable or directly related or attributable to the to building this house are relevant. So without wasting more time, let's go through the question together. And then one thing you need to understand from the first paragraph, okay, you must understand what the examiner is trying to achieve. According to this question, we are told that Klepatoni Limited is planning to expand into another country and has been asked by a prominent person in that country for a price quotation to build them a house. The board of directors believes that securing the contracts will help to launch houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. So that's a key point. This company, Klepatoni Limited, wants to quote a price that will exactly cover its relevant cost. What that means is that Klepatoni wants to break even. It is not the intention of Klepatoni to make profit from these contracts. So its objective or goal is to secure the contracts by quoting a price that will exactly cover its relevant cost. Of course, the company does not want to make loss. They just want to break even. When you cover your cost, that means you want to break even, but no profit, no loss. So that's a very vital important. That's a very vital point as far as this first paragraph is or introduction is concerned. So you are now given the following additional information. So like I said, relevant cost question are solved through the additional information. So let's start with additional information 1. We will treat it, then we'll come back to the second one. Now, in the first additional information, you are told that the chief executive and marketing director recently met with a potential client to discuss the house. The meeting was held at a restaurant, and Clepatoni Limited provided foods and drink at a cost of 37,500. Please, we are going to solve this together. I don't know it. I just want to provide support. You are the one that will be giving me the right answer so that I will put it down for you. So you are the one. At your own hand, please open to the material while I want to switch to the working note. Open to this material so that you follow through together. I want to switch to the working note.
Page.
All right. So like I said, you are the one that will solve the question. I assume that I don't know it. So just give me the number, then I will put it down. So I'll be asking you one after the other. Then, of course, solution to illustration number 6, I think. Let me confirm. Yes, illustration number 6. That's page 29. All right. So the name of this company is Clepatoni Limited. So examiner is asking us to prepare the minimum price to quote for the contracts. So number A, is it A or requirement 1? Let me confirm. Yes, requirement A. Okay, so calculating minimum price or relevant costs. All right, minimum price to quote. So if you are faced with this kind of a question on the day of your exam, you have to be very careful. You must ensure you understand the scenario before you put your pen to paper in order to avoid errors or mistakes being made. All right? So you take your time, ensure you understand what examiner is trying to say in the scenario. All right? So let's go back to the question. The first item that I read in the first additional information, we are told that the chief executive and the marketing director recently met with a potential client to discuss the house. The meeting was held at a restaurant, and Clepatoni Limited provided foods and drinks at a cost of 37,500. The cost of foods and drink at 37,500. Is it relevant or irrelevant? If you know it, raise your hand. 37,500. Relevant or irrelevant? Yes. Abubakar Shola, go ahead.
Irrelevant, sir.
Pardon?
Irrelevant.
Why?
Because it's a sunk cost. It has already been spent.
It has already been spent. It's a sunk cost. You are correct. Now, you will recall that in our last class, I mentioned that when you prepare question under relevant cost, you must provide justification on how you arrive at your numbers. That is, you have to state your assumption. That's one of the exam tips. Whether examiner asks you or not, even though the question you are asked, but whether you are asked or not, it's your responsibility to be able to state your assumptions, because in most cases, assumptions carry more mark than the calculation that you have done. If you do wonderfully well in your calculation and you ignore the assumption, you may fail the question. Yes, you may fail it because assumption carries more mark. All right then. So the 37,500 is irrelevant because food and drink has nothing to do with the project at hand. These houses that the company wants to build, they have not even commenced the construction of the houses. They started spending money. Remember, relevant costs must relate to the future. Therefore, the food and drink cost of 37,500 is a sunk cost and non-relevant. All right, so we are done with that. Let's move to the next one. Item number 2. We are told that 1,200 kilograms of material Z will be required for the house. Clepatoni Limited currently has 550 kilograms of material Z in its inventory, purchased at a price of 5,800 naira per kg. All right, material Z is regularly used in its houses and has a current replacement cost of 6,500 per kilogram. Now, let's treat that information before we move to the receipt value. In this question, you are told that the company will require, or the project will require 1,200 kilograms of material Z, and the company currently has 550 kilograms of material Z in stock. And this 550 kilogram was purchased at 5,500 naira per kilogram. That 5,500 naira, is it relevant or irrelevant? Yes, Abdulateef, go ahead.
5,500 naira is irrelevant.
Why?
It is a past cost, it's some costs that have been committed already.
Okay, so the 5,800 naira per kilogram for 550 kilogram of material Z is an historical cost or is sunk cost, because it represents the original amount at which this material Z was purchased previously. So that 5,800 naira is a sunk cost and therefore not relevant to the calculation. Now you are now told that material Z is regularly used in its houses and has a current replacement cost of 6,500 per kilogram. That 6,500 kilograms, is it relevant or irrelevant? Yes, Abdulateef.
That is relevant, sir.
Irrelevant or relevant?
Relevant.
Okay, let's do it this way. For all of you, if you want to answer, if it is relevant, just say re. If it is irrelevant, say ire. All right. that will clear the gray areas in your responses. All right. So, Abdulateef, are you saying the 6,500 is what?
It's re.
It's re. So why is it re?
Because it is a future cost.
It's a future.
And that is the replacement price, or what is it, sir?
So, examiner has told you that this material is regularly used in his houses and has a current replacement. I've told you already when I was explaining the concept. I said anywhere you see, you are once in a question under relevant cost, you are given current purchase price or replacement cost. It means that you have to use it. It is relevant. When I was explaining the concept, I said material. Well, I even draw the diagram. I said in stock. If the material is in stock and in frequent use and will be replaced, relevant cost is the current purchase price. So that's what examiner is telling you here. The material is regularly used. That means it's in frequent use. Because something that you use frequently, it will be exhausted and you need to go and buy. And I also mentioned that any material you have in stock is irrelevant because you have already incurred the cost. It has become historical. So it is not relevant. Now, how are we going to get the cost of material Z? we are told that the company will require, or the project will require 1,200 kilograms of material Z. Therefore, 1,200 multiplied by 6,500 naira. That will give us the total cost that we need as far as material Z is concerned. So I will then come here, material Z. Okay. We are told that the project will require 1,200 kilograms at 6,000, is it 6,005? Yes. 6,500 per kilogram. Please multiply for me. What do you have there?
7,800,000.
Pardon?
7,800,000.
7,800,000. That's the total cost of material Z. All right. So, of course, we are coming back for our assumption. But for now, let's do the calculation first. So we are still on the same paragraph, additional information number 2. You are told that the resale value of the material Z in inventory is 3,500 naira per kilogram. So if the company wants to dispose of course, we are given the disposal value or the scrap value of the material Z in inventory. That 550 kilogram of material Z in inventory that was purchased 5,800 naira per kilogram. You are now told that the resale value of that material is 3,500. This 3,500, how do we treat it? Yes. Yes, Ablatif, go ahead.
I think we ignore it because the information says material Z is in regular use. So there is no any information that says about disposal. It is compulsory that it is not used, therefore they will dispose it. So I think we don't need that information.
Okay, so again, thank you. You are correct. You recall that when I was explaining the concept under disposal value, I said that disposal value will represent a saving to an organization, and that the disposal value should be considered if it can be ascertained that the material is no longer needed and then will be disposed of. In this question, the examiner only gives you a disposal value of 3,500. You are not told that the material will be disposed of. Until you are told that the material will be disposed, that's only when you recognize the disposal value as a saving. As it is, that information, you ignore it, is not relevant to the calculation. I believe that is clear. Now, let's move to additional information number 3. 400 hours of construction workers' time are required to build the house. Clepatoni Limited construction workers are paid an hourly rate of 2,200 naira under a guaranteed wage agreement and currently have spare capacity to build the house. Yes. Femi, you raise your hand. Talk to me.
Yes, sir. Good evening, sir. I see that you are moving to the third one, but there's this material number 2. They need 1,002 kilograms of the material Z, but I think they still currently have 550 kg in their warehouse. Are they not going to use it at all?
They are not using it. According to the question, they are not using it. They are not using the one they have in the warehouse. So the examiner has already told you that 1,200 kilograms of material Z will be needed for the house. So, and because of the fact that examiner mentioned that the material is regularly used, so you need to go to the market and buy the entire 1,200 kilograms. You are less concerned with what you have in the stock. All right. So that one that you have in the stock can only be relevant if you are told that it will be disposed of. Any material you have in stock is irrelevant. Just ignore it. Okay?
Okay, thank you.
You're welcome. Yes. Who will answer the requirement number 3? How do we treat that information? Yes. Requirement number 3. Yes, Abubakar.
It's irrelevant, sir.
So why?
Because the question says they have spare capacity to build the house. So there's no
Okay.
need to pay them extra money. They
All
can do it
right.
in the regular hours.
All right. You are correct. So you will recall when I was explaining the concept under labor cost, I mentioned that, of course, we talk about spare capacity and a full capacity. And I said that under spare capacity, relevant cost is equal to 0 because the employee, the workers are idle. They are idle. And that's what the examiner told you that they have spare capacity. So they are not fully engaged. So when there is spare capacity, relevant cost of labor is equal to 0. So nothing will be charged as far as construction workers' time is concerned. All right. For the entire 400 hours, nothing will be charged. All right. So let's move on to the fourth one. Okay. The house will require 90 hours of engineer's time. Klepatoni Limited engineers are paid a monthly salary of 475,000 naira each and do not have any spare capacity. Okay, so let's treat that one before we move further. So we are told that Klepatoni engineers are paid a monthly salary of 475,000 naira each. That 475,000 naira, is it relevant or irrelevant?
Relevant.
Yes, Shala, go ahead. Yes. Why?
Because they will pay the salary whether or not they take the project.
You are correct. So irrespective of the decision taken on this project, the salary will be paid. You will recall when we talk about full capacity, we said that full capacity arises, salary paid to workers or to labor on a monthly basis. So salary paid to workers on a monthly basis are fixed in nature and therefore irrelevant. So under full capacity, the only relevant labor cost represents the extra labor cost that will be incurred or the cost of diverting resources arising from opportunity cost or contribution loss. Okay, so that's the concept we discussed last week. So this salary of 475,000 naira is irrelevant. Then we ignore it. So still on the same paragraph, you are now told that in order to meet the engineering requirement for the house, Klepatoni Limited can choose one of the following options. What page? It's on page 14, page 29. Rose is on page 29 to 30. The question. So Klepatoni Limited can choose one of the following options. Option 1, pay the engineers an overtime rate of 5,200 naira per hour to perform their additional work. Okay, so let's go and indicate that. What's the title? The heading is engineer's time or engineer's cost. All right. Engineer's time. Okay. Because there are two options. In the engineer's time, there are two options. The first option is to pay the engineers overtime. The second option is to reduce the engineers' hours available on other products, which is product Y. So that where you have two options, you are expected to make a choice between the two alternatives. So of course, what will be your option? Your option is to select the lower, any alternative with a lower cost. Therefore, I would then say select the lower of the lower of number 1, overtime. So How many hours does the engineer wants to spend on the contract? We are told 90 hours. 90 hours will be spent. All right. At what price? At 5,200 naira. 90 hours. Multiplied by 5,200 naira per hour. So multiply for me, what do you have? 90 multiplied by 5,200, what do you have?
68,000, 468,000.
468,000. Okay, so you close this. The second option is to reduce the engineer's time on product Y. If this happens, there will be loss of contribution. How do I mean by contribution? You are told that you are given the information for 1 unit of product Y. Sales value of product Y is 486,000. Variable cost of product Y is 336,500. The difference between sales and variable cost represents contribution. So there will be contribution loss. As a result, if you reduce the time that the engineers will spend on product Y, there will be loss of contribution as a result of that. Therefore, what are you supposed to do here? First thing first, you determine the contribution per unit. How do you determine the contribution? 486,000 minus 336,500 divided by 30 hours. It will give you the contribution loss per unit. Then you now multiply with the 90 hours that you want to spend on this new project. Okay, so let's put it down. Contribution loss. How do you calculate this? This would be 430, what is that? 486,000. Sales value is 486,000 minus variable cost of 336,500 divided by total hours spent on project Y, which is 30 hours. Then multiply by the 90 hours required on this new contract. Therefore, what do you have there?
448,500.
448,500. So, if the engineer spent overtime on the project, the total cost that the company will incur on this contract or project is 468,000. Okay? If the company switch resources from product Y, okay, there will be loss of contribution of 448,000. Which option should the company select? Of course, the one that is lower. Therefore, here will be 448. All right. So that's that. Let's move to the next one. So we are done with number 4. Let's go to additional information about 5. In all of these instances, we have to state your assumptions. Number 5, a specialist machine. I think somebody was sending a message. Please, what page? Okay. Oh, okay. Yes, a specialist machine will be required for 7 weeks for the house to be built. Clepatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that costs 1.5 million naira. All right. So there's a specialist machine that costs that was rented at 1.5 million naira. And then we are told that the machine is currently not in use. So that 1.5 million, is it relevant or irrelevant? Yes.
Ire.
Okay. Why is it not relevant?
Sunk cost, sir.
It's a sunk cost. It's a sunk cost because this specialist machine has already been rented at 1.5 million before the commencement of project of this new project of these houses that they wants to build. All right. Even though the machine is currently not in use, provided, of course, the cost has been committed. Therefore, it is not relevant. The machine can be rented for an additional 15 weeks at a cost of 1,525,000 naira. The specialist machine can only be rented in blocks of 15 weeks. Okay, so that 1,525,000 is it relevant or irrelevant?
We require 7 weeks for the work.
Yes.
House to be built.
Relevant, sir.
Pardon?
It's
Wow, why is it red?
because it is a future cost.
It's a future, it's an additional cost. It's an additional cost. You are told that the machine can be rented for an additional 15 weeks. So it's an extra cost that will be incurred. Therefore, the 1,525,000 naira is relevant. So examiner now told you further that alternatively, the machine can be purchased for 16 million naira and sold after the work on the house has been completed for 14 million naira. So if the company decides to purchase the machine at a cost of 16 million, they're also going to dispose it of after the project has been completed at that price. That means technically the net amount, the exact cost incurred in purchasing the machine is 2 million. That is 16 million minus 14 million. So in this case, since there's an alternative, so you also need to take a choice. You need to make a choice. So I will then come here. This is specialist machine. Specialist machine. Anywhere you have alternatives, you should always select the lower of it if you are referring to cost. So I would then say the lower of, you need to select the lower of number one. What did the examiner call it? The 15 machine renter. Okay, machine renter. Okay. Number one, machine renter. This machine will be rented at 1,525,000. Or two, the machine will be purchased, all right, at 16 million and finally disposed of at 14 million naira. So net purchase price. Net purchase price. So this is 16 million minus 14 million. So the actual cost that will be incurred on the machine is 2 million. So between 1,525,000 and 2 million naira. So of course, the machine rental is cheaper. So here will be 1,525,000. Okay. Let's move to the next one. Item number 6. The windows required for the house have recently been developed by Clepatoni Limited and use the latest environmentally friendly insulating material. They produce the windows at a cost of 3,495,000 naira and are currently the only types the only ones of their type. So that 3,495,000 naira, is it relevant or irrelevant? Yes. 3,495,000. Item number 6. For window cost, relevant or irrelevant?
Irre.
It is not relevant because it's a sunk cost. It's because you are told that they produce the window at a cost of 3,495,000 naira. So that's a sunk cost. A sunk cost is irrelevant cost. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and would not be for sale for prospective clients. Klepatoni Limited has had assurances for 3 separate clients that they will place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000 naira. If the windows are used for the contract, Klepatoni Limited will not be able to attend the conference. Of course, it is based on the information given in this question, the company will not be able to attend the conference. So the conference organizer will charge a penalty fee of 150,000 naira for non-attendance by the company. The chief executive of Klepatoni Limited can meet the clients directly and still secure the orders for the window. Okay, so how do we trade this information? That contribution of 1,045,000 naira, how do we treat it? Relevant or irrelevant? Quickly. Yes, Shola, go ahead.
Erasure.
Why?
Because the question further says that they can secure the orders even if they don't go to the conference.
Okay, that's correct. So irrespective of whether the company attend the conference or not, they will still earn the contribution. So the contribution is not lost. So that information, that cost is not relevant to our calculation. However, because Klepatoni will not be able to attend the conference, there will be a penalty, there's a penalty charge of 150,000 naira that the company will pay for non-attendance. So that 150,000 is relevant. Let's account for it. So I will say penalty or window cost. Window cost, penalty. Penalty fee, 150,000 naira. Okay. Next item. The meetings will require 2 days of the chief executive's time. The chief executive is paid an annual salary of 41,400,000 and contracted to work 260 days per year. So that money, that 41,400,000, is it relevant or irrelevant?
Not relevant.
Why?
It's either something is done or not. It is a normal salary that will go. So it's a fixed cost.
You are correct. So irrespective of the decision taken on these contracts, the CEO salary will certainly be paid. All right. So that 41,400,000 is irrelevant. So we move to item number 7. The house to be built require 400 kilograms of other materials. Klepatoni Limited currently has none of these materials in its inventory. The total current purchase price for this other material is 600,000 naira. Other material cost of 600,000 naira, relevant or irrelevant?
Relevant.
Irrelevant or relevant?
Relevant.
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 It's relevant.
Okay. All right, then it is relevant. Yeah, because you are told that the house will require that 400 kilogram and the company does not have it currently. So they need to go and purchase it. So that's current purchase price. So you come here, other material. $600,000. Okay. Next item, number 8. Clepatoni Limited fixed overhead absorption rate is 3,700 naira per construction worker hour. So that 3,700 per construction worker hour, relevant or irrelevant? Yes. $3,700 per construction worker hour.
Irrelevant.
Why?
Because it's a fixed cost that we pay to the construction worker. I think it's a fixed cost.
Okay. So because it's a fixed cost, is that why it is not relevant?
And the construction worker are under the payroll of the company.
Okay. So, of course, it is not relevant, but it's not because it's a fixed cost. It's anything absorption. When you are absorbing, when it's just a kind of allocation. The fixed overhead is incurred, then absorbed by product or service or by project or job. So it is not, this code does not relate to, it doesn't relate to this contract to build a house. It doesn't relate to the contract. So the company is just charging it on the basis of construction workers. They are charged, they are allocating it to the project. So it is not the project that incur the cost. So it's not because it's a fixed cost. Fixed cost could be relevant provided it relates to the project. But this part is an absorption. Absorption is just like allocation of cost, allocation of overhead cost. So it is not relevant. So we ignore. Of course, you are correct. It's not, but it's not because it's a fixed cost. It's because it's an allocation. It's an allocated cost. Number 9. Clepatoni Limited normal policy is to add 12% markup to the cost of each house. That item number 9, how do we treat it? Is it relevant to our calculation or not? Yes?
It's relevant.
Ira,
Yes?
Ira,
Why?
because we are trying to break even, we should not add a percentage of profit.
Okay. So the intention of the management of Clepatoni is to quote a price that will be sufficient to cover the relevant costs. So it's not the intention of the management to earn a profit. The company just wants to break even, not to earn a profit. So if that is the case, the profit markup is irrelevant in this case. So you ignore it. That information is not relevant to our calculation. All right. So,
but if they are not to break even, are we going to consider it?
if that information, in the first paragraph, examiner told you that the company just wants to quote price that will be sufficient to cover the relevant cost. So if that information is not there, certainly you will need to account for this.
Okay,
so this will usually happen. This will happen if the question is asking you to determine contract price to quote for the quote for the project. If you want to determine contract price, so to determine the contract price, you need to determine the total cost that the company will incur plus the profit markup that will be included. So the total of the cost and the profits will then be the contract price to charge.
Okay, sir.
You get?
Yes, sir.
So let's move on. So at this point, So we are done with the calculation. Let's sum it up and then we state our assumption. All right, so let's add everything together. What do you have? Yes. What's the total? Add it up.
10,523,000.
10,523,000.
500.
So 523,500. So this represents the total relevant cost or minimum price to quote for the contracts. Okay. So now, like I said, you can see how big is the question and look at our calculation, very small. So the next thing we need to do is to state our assumptions. I will then say assumptions. Okay. Assumption number 1. Before that, we then say the calculation above is based on the following assumptions. Is based on the following underlying assumptions. All right. So we started, number 1, we started with food and drinks. And we said that, we go back to the question. We said that the food and drinks is not relevant because it's a sunk cost. All right. So we are told in the question that the meeting was held at a restaurant and Klepatoni Limited provided food and drinks at a cost of 37,500. So and we said that cost is not relevant. The cost of food, the cost of food and drinks of 37,500 naira is a sunk cost. And non-relevant to the calculation. That reminds me, do we even have any, what's happening to my ladies in the class? I've not heard your voice today at all. Only the men are contributing.
They are very patient.
Eh?
They are very patient.
They are patient.
Yes.
Wow. All right. So that's how we treated the food and drinks. They are not relevant because it's a sunk cost. Then number 2, the second item as listed by the examiner is material Z. In material Z, the material Z in the inventory of 5,550 kilogram, we said that cost 5,800 naira. We said it's a sunk cost and therefore not relevant. Let's indicate that. Material Z. The original cost of material Z of 5,000, sorry, of 5,800 naira per kilogram is an historical cost. And therefore, not relevant to the calculation. Okay, that's how we treat that cost of 5,800 naira. Then, material Z, of course, only the replacement cost of 6,500 naira is included in the calculation. So I would then say only the replacement cost of 6,500 per kilogram is included in the calculation. Okay. Lastly, in that paragraph, we also given receipt value of 3,500. In addition, the receipt value of 3,500 naira per kilogram of material Z is not relevant. Since there is no indication that the material will be disposed of okay, so that's our treatment of the disposal value of 3,500 naira. So we are done with that. We have stated our assumption as far as material Z is concerned. Let's move to number 3. 400 hours of construction workers' time are required to build a house. Clepatonic construction workers are paid an hourly rate of 2,200 a guarantee wage agreement and currently have spare capacity to build the house. So we said this 2,200 naira is irrelevant since there is spare capacity. So let's indicate that construction workers' time. Assumption number 3, construction workers' time. Okay. The hourly rates of 2,200 naira for construction workers is not relevant to the calculation since there is spare capacity. since there's spare capacity. All right. So that's our assumption. What is number 4? Let me complete that statement. Since there's spare capacity to build the house. Then number 4, we still have 6 more to go. Number 4, the house will require 90 hours of the engineer's time. Clepatoni Limited engineers are paid a monthly salary of 475,000 naira each. So we said that monthly salary is irrelevant. Okay? So engineer's time. Let's indicate that. The monthly salary paid to the engineers is irrelevant because irrespective of the decision taken on the projects, the engineers will be paid. All right, whether the company executes this project or not, the company will have to pay the engineers. All right, so that's 475,000 naira is irrelevant. The monthly salaries of 475,000 naira paid to the engineers is irrelevant. Okay, so let's move on. In order to meet the engineering requirements for the house, Clepatoni can choose 2 of the following options. All right, so overtime as well as a contribution loss. So let's complete that statement. The only relevant costs associated with the engineer's time is the lower of overtime costs of how much is overtime? 468,000 is the lower of overtime cost of 468,000 or contribution loss. Contribution loss on product Y of 448,000. Is it 448? Let me confirm. 448,500. Yes, 448,500. 448,500. So that's that. So that's our treatment of engineers' time. Okay. Number 5. You have to sweat for you to be able to earn your mark to maximize your scores. You have to sweat. That's compulsory question. That's why we always advise students, don't make compulsory question your first attempt. Otherwise, it will drag you. You would have spent about 2 hours, you are still on the question, you won't know. And the invigilator will just tell you that 30 minutes more. How do you want to spend 30 minutes for the remaining 4 questions? All right? So you have to be very careful. You have to be strategic and practice as many questions as possible to build your confidence. All right? Preparatory to your exams. So number 5, a specialist matching will be required for 7 weeks for the house. So what's our assumption here? We said that the 1.5 million naira, the initial rental cost for the specialist matching of 1.5 million naira is not relevant because it's a commuted cost. All right, it's a commuted cost because we are told that the company Clepatoni Limited has 4 weeks remaining on the 15-week specialist matching renter. It's a rental contracts. Anything contract is a committed cost, more like a lease. All right, so it's not relevant. So let's put it down. Specialist matching. Okay. The rental cost. The rental contract cost of 1.5 million naira is a committed cost. Are not relevant, hence not relevant to the calculation. Not relevant to the calculation. So irrespective of the decision taken on these contracts, the company must pay that 1,500,000. So it's a committed cost. Any lease cost is a committed cost. Now, there's an additional information in that requirement number, additional information number 5. So you are now told that the machine can be rented for an additional 15 weeks at a cost of 1,525,000. So there's also an alternative cost, which is 2 million naira. So to close that assumption, I can say the only relevant cost associated with the specialist machine is the lower of the additional machine rental, additional rental cost is the lower of the additional rental cost of 1,525,000 or net purchase price. Net purchase price of 2 million naira, representing the difference between the purchase price of 16 million naira and a disposal value of 14 million. So we are done with specialist machine. Let's move to the next one. Item number 6. So in the item number 6, we are told that the company produced the window at a cost of 3,495,000. So the window cost. So number 6. Window cost. The window cost of 3,495,000 naira is a sunk cost. And therefore not relevant to the calculation. Okay. Also, since the chief executive officer can still meet with the clients to secure the contracts for the windows, to secure the contracts for the window. The contribution of 1,045,000 naira is not lost. It's not lost. Hence, not relevant to the calculation. You can see with the assumption that we are stating, it's not something you are going to fabricate. It's already there in the question. Examiner is only asking you to explain how you come about your figures. All right? However, a penalty fee of 150,000 naira has been included in the calculation of the relevant costs. Since the company is not attending the window exhibition, since the company or since Clepatoni Limited will not attend okay, will not attend the conference. All right, so that's that. Finally, in that same paragraph, the chief executive salary of 41,400,000 is not relevant. Okay. The CEO salaries of 41,400,000 naira is not relevant because the chief executive will be paid irrespective of the decision taken on the project. Whether you accept this project or not, the company must, whether the company execute the project or not, the chief executive salary must be paid. All right. So item number 7, we are getting there. Only one question since. All right. The house to be built requires 400 kilograms of other material. So we said, of course, this other material is not available, so it's relevant. Yes, other material. Okay. The current purchase price of 600,000 naira for the other material is relevant since the material is not available. Okay, so that's that. Number 7. Oh, that's number 7 already. Number 8. Clepatoni Limited fixed overhead absorption rate is 3,700. We said that is not relevant. Number 8. Fixed overhead absorption. So the fixed overhead absorption rate of 3,700 naira is not relevant to the calculation because it's an apportionment. Okay, so that's that. It's not, the cost is not related to the contracts. Number 9, Clepatoni Limited normal policy is to have 12% markup to the cost of each house. So markup. Number 9, profit markup. All right, so we then say since the intention of Clepatoni Limited is to quote price that will cover its relevant costs. The profit markup of 12% is not needed or is not relevant to the calculation. So that's it. That's it. Let me know if you have any question on based on what we have done so far. Any question on what we have done? This is a big work for me. And if it's a physical class, I don't need to be writing all of this. You can see I'm the one doing the work. You are just there, relaxed, enjoying, listening, you know. Not even a thank you, not even a well done.
Well done,
David,
sir.
yes, go ahead.
Well done, sir.
Thank
I
you,
hear
So
sir.
well done. Thank you.
I hear
Well
you.
done.
You are doing
I
well,
hear
sir.
you. You're welcome. So talk to me, David. You raised
Thank
hand.
you, sir.
Yeah,
Okay, sir, can you hear me, sir?
I can hear you.
Okay, so my first question is I want to confirm that the contribution loss can also be called an opportunity cost, right?
Yes, it is.
Okay, please, why did you
All right,
divide
David.
by, can you hear me?
Yeah, I can hear you.
I said, why did you divide by the number of hours by 30 hours? Like, you didn't explain why you did that. Can you explain? I
And
want to
now,
know why, though,
I
please.
did explain. You know, in the question you are told that the engineers will require 90 hours on the contract, and the engineers will require 90 hours on the contracts. So if the companies move away from product Y, the company will lose contribution. What is the control? You need first thing first, you need to determine the contribution per hour that the company will lose. So to get the contribution per hour, you need to less the sales value from the variable cost, which will give you total contribution. So to now get the contribution per hour, you need to divide it by the number of hours on product Y. You get? So once you get the number of the contribution per hour, then you now multiply by the total hours required on this contract, which is 90 hours.
Okay. Yeah, secondly, for the second additional information that someone earlier asked, he said that the company already has 550, but we're ignoring it and we're buying the entire 120 over again. And because when I saw the information first, like the first thing that came to my mind, that I was going to less the two values since I already have 550, but you said no, I'll just ignore it and buy a new one entirely. And I'm just wondering, like, what's the rationale? Is it if the company had like 5 staff members and requires 7 for the project, would they ignore the 5 entirely and then employ new 7 members just for the project?
So the thing is that examiner has already told you that 1,200 kilogram of material Z will be required for the contract to build the house. You need 1,200 kilogram. And you are told that this material is regularly in use. When I was explaining the concept, I mentioned to you that when you are told that material is in frequent use and will be replaced, so it is not, you are less concerned with what you have in the warehouse or in the stock. Your focus is what the material that you need for the project at hand. So you need 1,200 kilogram. even though you have 5,500 kilograms in the warehouse, we are less concerned with that because examiner has already told you that this material is in regular use, and you are given the replacement cost, which is the same thing as current purchase price. So when I was explaining the concept to you guys, I mentioned that once you are told that the materials will be replaced, all right, or once you are given replacement cost, so you have to include, you need to include the replacement cost or the current purchase price. So in this question, that 550 kilogram is irrelevant. You ignore because the company has already purchased it previously. So because it's in frequent use, it's in regular use. So that means that material will surely be exhausted, and then a new one will need to be bought at the current purchase price or at a replacement cost. So that's why we did not consider that. So the only any material you have in the warehouse, the only reason that will make you to use it is if you are told that the material will be disposed of. All right. So the savings that will arise from the disposal then represents a relevant cash flow that you need to consider. I believe that is clear. David.
Yeah, so if it was going to be disposed of, we're going to less the value, you're just going to use the
Yes.
550
With less, if
as
you
the
are to, for
saving.
example, now this 550, if you are told it to be disposed of, that 3,500 or 3,800, the disposal value, you use it to
Okay.
multiply the 550.
3,000.
All right, you use it to multiply the 550, then it should now be in brackets to reduce the cost.
Okay,
But
sir.
in the question, we are not told it to be disposed of. That's why we ignore it. All right. Okay. So that's as per that.
Scroll down to the please scroll down to the last whatever
I'm
assumption,
coming.
please.
Let me rewrite this to 90 hours. Which one? The assumption? You say I should scroll down to where?
You are there already. I can see that.
Okay.
The last one, the assumption, the last assumption.
All right.
Yes,
So
sir.
number
Yes,
B
sir.
the number B part of the question, what are you had to do? Let me see. You have to explain two reasons why relevant costing may not be suitable approach to pricing houses in the longer term for Klepatoni Limited. So then number C, recommend with justification a pricing strategy for Klepatoni Limited should use to price the innovative, environmentally friendly houses when they are launched in the new country. Now, examiner is asking you to explain two reasons why relevant costing may not be suitable approach to pricing houses in the longer term for Klepatoni. This is very key because when you say a company, the objective of a company, the primary objective of any company is to make profits. All right, you are in business to make profit, so not to break even all the time. All right. In fact, let me stop sharing this so that let's see if we can start another question. Let me use Golden Book to explain this. That will
And
save
we only
time.
have 30 minutes. We only have 30 minutes.
Let's see how. Let me see. That's illustration number. What is that? I can't imagine. Only one question since. This well.
It's number one question, sir.
Number one, no, I know. I think not this one.
That's
I
why
want
it's
to.
long like that.
Okay. Abby. Okay, this is the, yes, this is it. Let me see. I want to use this to explain the, so in the question, in the requirement number B, examiner is asking us why relevant costs. I believe I'm already sharing with you, right? So examiner is asking you to explain two reasons why relevant costing may not be suitable approach to pricing houses in the longer term for the company. So to answer this, of course, relevant costing, when you look at the way I provided the response here, relevant costing concepts has been applied in determining the minimum price quotation for the contracts. The relevant cost represent the cost that will be incurred purposely because of the contract. The minimum price quotation may not be suitable for the contract because, one, the company's intention to produce minimum price to cover the relevant cost on the contract will not be sustainable in the long run. A markup percentage above the break-even point would have been more appropriate for the pricing. In addition, the company's financial situation may worsen if it cannot earn contribution to offset the organization's general fixed overhead. Certainly, the company will surely incur fixed overhead. All right. So if the company is based on their intention that, okay, I just want to break even, all right? As a company, I just want to break even. So what I miss is that how would the company cover the other overheads, the general overheads that will be incurred, all right? So, and that's why it is only appropriate for the company to charge a markup percentage on the total contract price, on the total relevant cost. That will serve as a motivation for the company. Then number two, Clepatoni Limited is planning to expand operation in other countries in the future. Therefore, funds will be needed to execute the expansion. So if the company's expansion is not attractive or viable to investors, then of course the investor will not contribute their finance to undertake it. All right, because no no company operates in isolation. So you need funds for the purpose of running the business profitably. So if a company is not being run profitably, if your intention is to just cover costs, just want to break even, there is no attraction. Investor will not provide their money to finance your operation. So as a result of that, the company may go out of the business. So it is not a good approach to price this kind of projects, to price this kind of a project with relevant cost only. All right. So that is as per the requirement number B. Yes, Abdulatif, talk to me.
Thank you, sir. I only want to just suggest that you help us to add this theory answers to the workings when you share it with us, please, after the class.
Okay. Now, number C part of the question of the requirements. You are to recommend with justification a pricing strategy for Clepatoni Limited to price the innovative, environmentally friendly houses. So examiner is asking you to provide the pricing strategy to be adopted. What kind of pricing strategy should the company use in this circumstance? Of course, it has to be market scheming. The market scheming is more appropriate to price or to price this kind of innovative technology that the company intends to launch in the new country. So market scheming involves the strategy of charging a higher price at the initial stage of a product in the market and later lower the price to attract other customer segments. So that is what the Clepatoni Limited management should use. So that's the same thing. That's the same strategy that some of the technological companies we have in Nigeria, like MTN, in the early days when they started around early 2000. All right. So you can imagine then we are buying SIM card for like we started with 6,000 up to went up to like 20 something thousand or even 30,000 naira for just SIM card alone because it's a new introduction, it's a new technology in the market. So people are demanding for it. We Nigerians, we have not used we have not used a mobile phone just like that. It's a new invention as at that time. People are buying at a high cost. But today, how much is a SIM card? You can buy SIM card for 200 naira, maximum 1,000 naira. So when MTN came to the market, MTN and the other companies like that in the industry, when they came into the market, they were charging high price. So that is what is called a market scheming. So when you introduce a new product, especially products that are differentiated, all right, products that are unique, technologically unique or innovative kind of a product. So you try to charge as high as possible so that by the time the competitors are coming into the market, of course, you would have made so much profit and you could have even gained your ground. You would have established yourself in the industry before the competitors or your rivals will join. So by the time the rivals will join, there are more competition, and at the same time, you need to lower your price in order to attract other customer segments. So this is what is known as a market scheming. All right. So that is basically that. Let me know if you have any question for me before we call it a day. All right. Any question? So you cannot, this is
Yes,
about
sir.
30 minutes after, so we cannot start another question again. So we may have to start afresh. So possibly, as it is right now, I will only have one more question for you. Possibly the question that was tested last night, the compulsory question that was tested last night, that would be the one I may likely solve next. So every other question you have in the material, if you need it, then you purchase your golden book, you will see the solution, everything there. All right. So everything are in the golden book. Okay. Abdulatif, you raised hand. Talk to me.
I just want to corroborate your solution as per suggestion for Klepatoni to use market scheming.
Okay. Let's go ahead.
As taught by Ashwagi that market scheming is most appropriate when you are the only producer. There is no any other rivalry product in the market.
And that's
So
why the
you
product
take
is unique.
advantage.
Yeah, you are correct.
That's it.
Yeah. Okay. So, any question for me so that we can close the class? Any question? All right. So, in the absence of no further question, I want to say thank you for joining the class. I will see you next time by the grace of God. Good night, everyone.